given that this is a high risk activity, you should be figuring out what portion of your net worth you're going to deploy into this category, into this asset class. I've decided to put 10% of my assets into this angel investing asset class. And so of that category, then if you're putting in that amount of money, you should then figure out how to divide that by at least 20, so you're making 20 separate investments so that those investments have a reasonable chance of producing a return. And you should be aiming for this internal rate of return of 25% to make up for the risk of those other companies not succeeding. So when we look at portfolio size, we see that with a portfolio of 5, your chances of getting your money back are like 50-50. And really you want to be somewhere in the 20-25 range to have a relatively better than 90% chance that you will get your money back. And so we're looking at relatively big numbers of companies in order to make this work. But when you do this, you can get a portfolio that's 2-3x average across all those companies. And then some people like Right Side Capital are believing, do 100, do 200, and then you get really good chance of getting significantly more multiple on your companies. Since companies are typically wanting $25,000 as their minimum investment here in Seattle, and so you're going to want to build a portfolio that makes sense. If you're a millionaire and you're investing in 20 deals and you're investing 10% of your net worth, that's 100,000 divided by 20 is $5,000 a piece. So the $5,000 of the Angel Conference actually teaches a recipe for that just barely a millionaire to be able to do this. And the answer of how to invest $25K when you're only writing a $5,000 check is that you have to learn how to invest as a group. And so we as an Angel Conference are teaching a recipe of how groups of people can invest together to write the $25, $50, $100,000 check, so that the companies get what they need, but the investors also stay within a portfolio building methodology. So one of the things that we know from Rob Wilbank's data is that investing in what you know tends to improve your outcomes. And here's the data set for that. And we know that if you do a reasonable amount of due diligence, it also improves your outcomes. So we want people to look at the guts of the company, look at the market, double check on what the company said to you, and understand what the reality of that business structure is. And when you do that, you can double your outcomes.